CEO of BGC Partners, Howard Lutnick, made a surprising and bold prediction that QE3 is inevitable.
If QE2 stops, you know what we're going to see next? QE3. Here's the call. QE3 is coming. It's coming so much sooner than everyone expects. Everybody, whenever I've gone on these shows for years, everyone always says, you know, look at the fundamentals. Interest rates have to go up. We can't run these deficits. And I'd say you're all absolutely right. You're just way, way early.
Joining us now to discuss this is Peter Schiff of Euro Pacific Capital. Peter, what do you think?
Well, I think he's right. I mean, we're going to have QE3, and I think that's a bad thing. And it's not that, you know, if we didn't have QE3, the economy would collapse. But the problem is QE3 means it's going to be even worse because eventually we do have to stop. And the longer we wait, the worse it's going to be.
So, Peter, when we think of QE2 and then we think of QE3, it's not going to be the same. It's got to be an unconventional type of mechanism for QE3, correct?
I don't think the Fed is going to label it QE3 because there's a lot of people that have been criticizing them. So whatever they're going to call it, they don't have to officially announce in advance that they're going to print more money and buy bonds. But that's exactly what they're going to do because if the Fed doesn't buy them, who's going to?
But, Peter, look at the trade balance today. It's the point that I think you've made and I've made, which is that the weaker dollar is in America's best interest right now. And they're never going to say this. But why rock the boat? The point is that exports were a record this month.
It's not in our best interest. It's inevitable. It's going to happen. But it's not a good thing.
Sure it is. Look, it's not, the emerging market currencies, which you like and I follow every day, are going to parity with the dollar. The point is that from a credit perspective, these sovereigns have a much better balance sheet than the United States government. But a slow process to that end is not a bad thing.
Well, it's bad for Americans who are going to be poorer. I mean, if you think about the trade deficit, why are we exporting more? It's because our goods are being marked down. A weak currency is like putting your goods on sale. But what that means is you have to export a lot more.
Have never been more competitive around the world with this weaker dollar.
Let me make this point. We now have to export more to pay for our imports. That means a lower standard of living. Americans are getting poorer. The rest of the world, who has a strengthening currency, they're getting richer. So we shouldn't celebrate the fact that we have a weak currency, but a weak currency is the unfortunate consequence of bad monetary and fiscal policy.
Peter, switch gears with me. Let's talk debt ceiling. Is there any scenario coming out of debt ceiling where you see that impacting gold to the downside, or do you just think it's a lot of lip service and nothing's really going to happen?
No, unfortunately, I think it's going to impact gold to the upside because we're going to raise the debt ceiling. That's a mistake. The government might pretend, the politicians might pretend that they're attaching some real cuts to the increase, but they won't be. It'll all be smoke and mirrors. It'll be cuts that happen way into the future and mainly based on accounting gimmicks and overly optimistic economic assumptions. So there will be no real cuts. They're going to increase the debt ceiling. That's bullish for gold because it's bearish for the dollar and it's bearish for the U.S. economy.
All right, Peter, got to leave it there. Thanks a lot for joining us. Appreciate it. Peter Schiff of Euro Pacific Capital. All right.